Hey, this is Trader Travis back with day 2 of my commitment to show up for the first 30 days of this year to record a video to give you a nugget of wisdom, hopefully add some value in life. And today I want to talk about the cheap stock trap. But before I get to that, my wife said in the last video I looked tired. So let me look cheery today. And I was like, okay. She's like, if you're just tired, why don't you just tell people? I'm like, okay, your wish is my command. I was like, what do you expect? I have an argument with my wife and I'm supposed to come to work and record a video and look all flippin' happy? Like, I don't know. Maybe some people can do that because they compartmentalize good and they're sociopaths. I don't know. But I don't. That's one of my downfalls, right? I have a negative loopy brain. I could have everything great going on in my life, but my brain loops on negative stuff that I can't stand. And so everybody's always pointed out, at jobs and things like that. We can always tell how you feel, Travis, because you wear your feelings on your face or whatever phrase they use. Or as my kids said, I know when you're upset because you look like this. My nickname used to be Mr. Yelly Pants. Obviously, I must have got better with yelling. My wife would disagree, but they don't call me that anymore. But anyway, so you want to talk about tired? Let's talk about my marriage. No, I'm not going to do that. Because then I'll have another argument when I get back home waiting for me, and I'm not going to do that. So let's move on to talk about cheap stocks, and I want to equate it to dates, right? Stocks or dates. Think of a stock you want to invest in and put your money towards is a date. And if you want to have a good relationship, doesn't it help to pick a good date? And a lot of people go by looks, something they're attracted to. I mean, it's shallow, but it's usually the first thing we can go off, right? We see somebody that's attractive, whether it's attractive mentally or physically, some kind of attraction. And I'm just going to call it a pretty face, right? And so you have two people with two pretty faces, right? Two potential dates, but you want a good relationship. So how do we sift these? And I'm saying all this because we're talking about Macy's, right? Macy's is one of our pretty faces for the day. I got a comment on YouTube. Macy's pays about an 8 to 10% dividend. And somebody was saying, well, I'm trying to figure out how much of my money should I put into this stock? And I was like, well, first of all, you should research. Well, first of all, I don't advise most of my members to invest in individual stocks. They're just too volatile. We stick with broad-based ETFs, right? Because they're more stable, more safe, and stocks are just too risky, in my opinion. Anyway, it's just everybody has different ways of doing it. So if I do invest in stocks, I either insure it or I have it such a small amount of my net worth that if we lost everything, it's not a big deal. So anyway, so the first thing I told them is, hey, let's research. First thing is you probably should research, the survival rate of companies that pay a 10% dividend because it's a pretty face. It's a cheap stock. It's currently trading at $16. Right now it pays an 8.8% dividend. And so you could park your money there and you don't have to do anything, right? You don't have to get out to bed every day. You're going to make 8% on your money. That is pretty attractive, right? That's that pretty face. So let's check the character of this date, right? You can find a pretty face, but what if this person has no character? They're lying to you, they cheat on you, but they have a pretty face, right? Okay, compared to somebody that has a pretty face, but they have integrity, right? They serve humanity. They're doing great things for people. And they also have a pretty face. Which person do you want to be in a relationship with, right? And so that's how you need to think about stocks, right? So let's dig deeper here. Macy's pays an 8% dividend. So I told him, hey, let's research. Well, not me, but if he wants to invest in it, he should research the survival rate of companies that pay a 10% dividend rate because that's a lot of money to dish out. 2, I said Wall Street votes with its money, right? So we're going to talk about another pretty face, and that's going to be Domino's Pizza. And where do I have it here? I have it pulled up here. So Domino's Pizza is our other pretty face. It's at $14. Not right now, but just stick with me for a second. So Domino's Pizza at $14, pretty face. Macy's at $16, another pretty face. But which person do you want to be in a relationship with? And how do we figure this out? So let's go ahead and do this research here so you can figure out how to sift through your dates, i.e. your stocks, to pick one that hopefully can give you a good relationship. Because once you put your money in it, you're in a relationship with that stock. You could do everything right. You could pick the pretty face with integrity. I know some of you have been in marriages and been divorced. You're like, I did everything right and I still got divorced. So just because you do everything right on the front end does not mean it's going to work out for you. But that's probably more prudent anyway than just picking any old pretty face. So let's look at pretty face Macy's right here. $16 stock, currently pays an 8% dividend, but this is how we research the character of that stock. So the first thing I do to check a stock's character, the date to character of this pretty face, is I want to look at here on financials on Yahoo Finance. So we're looking at the annual revenue here. It went from 27,000 to 25 to 24 and back up to 25. It's inconsistent, but it's definitely going down from 24, right? Revenue is not increasing. Is that somewhere you want to put your money? The stock is not increasing their revenue each year. I don't know. And then I use Investors Business Daily. It ranks stocks from, I think, I don't know, 0 to 99 or 1 to 99. But anyway, the ranking for Macy's is 7. So they're telling you that fundamentally, as far as earnings and how the inner workings of the company, the character of the company is pretty low. So is that where you want to put your money? Second of all, again, Wall Street votes with its dollars. This is the 5-year weekly chart of Macy's. What has it done in the last 5 years? What has Wall Street told you about this company? Wall Street is about making money, right? To the tune where they screw you over. Because Wall Street is about making themselves rich, not you. Most people can agree on that, right? So what is Wall Street telling you they're doing with this stock? Are they buying it up and pushing it up? Because when Wall Street is buying a stock, they push it up in price. But when they're unloading a stock because it's a horrible date, they're trying to divorce this stock, it goes down in price. So if Wall Street is telling you they don't want their money there, why would you put your money there? All right. Okay, let's go back to Domino's Pizza. I told you it was a date that was $14. No, it's not $14 now, but let's actually look at Domino's Pizza here on Yahoo Finance. Let's look up the financials of Domino's Pizza really quick. And what do we see on the revenue? 2.4, 2.7, and 3.4. Revenue is going up. Now that may be a good date. That person is going somewhere in life, right? Don't you want to be in a relationship with someone who's going somewhere in life versus someone who's steadily not going somewhere? Not only not going somewhere, decreasing, right? So again, think of stocks as dates when you put your money in your relationship. So now let's look at what Wall Street has done with Domino's Pizza over the last 5 years. It's gone up in price from, you know what, it was at maybe $99 or $100, is at $293. It almost tripled in price in the last 5 years. And the reason I talked about it is $14 in the beginning. It was a pretty face because way back when Domino's used to be a cheap stock like Macy's. But let's look at here. IBD had ranked it and said it's a cheap stock, but the fundamentals are solid. They are making money. They're doing great. And it was $14 back in March when it passed our hot stock formula, which finds the top 10 to 20% of all stocks in the market. Well, regardless of what price, Macy's didn't survive that filter, right? That's why Macy's is declining. But back in March 2010, Domino's Pizza triggered on our hot stock formula list at the price of 14. I think I found it when it was initially 12, but it's 14. So I have here, if you had just invested 12,000 in that stock way back when, you'd be sitting on more than 219, because I did this example probably several months ago. So that shows you an example of a pretty face. Both had pretty faces, i.e. cheap prices, but one had better character. And Wall Street showed you that, hey, this is the one we want to be in a relationship with. So we're putting our money here. And this stock went from $14 all the way to $300 essentially in what? About 10 years. So again, think of stocks like dates and don't fall for the cheap stock trap. Just because a stock's price is cheap doesn't mean it should be where you put your money, right? You have to do a little bit more due diligence there. And a 10% dividend, please. If Wall Street is pushing that stock down, I don't care if it pays a 10% dividend or not. I'm not touching it with a 10-foot pole because there are better and lower risk ways to get a 10% return on my money than putting in a stock like Macy's. If I did put my money here in a stock like Macy's, the only way I would do it is if I bought insurance for it, i.e. called protective put options. And if I found other option strategies to pay for that insurance, because I don't want to pay for my insurance myself. I want other people to pay for the insurance. That's the only way I will put my money in Macy's, but I'm not even going to do that because it's a distraction. I can put my money in a stock like Apple, who is clearly revenue is going up, and clearly Wall Street is pushing the stock up because Wall Street is telling you this is where we are putting our money right now. So that's today's lesson. Be careful about falling for a pretty face, right? Be careful about falling for the cheap stock trap. It's no different than just picking somebody because they have a pretty face. It's more than a pretty face. It has to be something behind that pretty face. Same with these stocks. You know, yes, cheap stocks are great if you can find a filter that shows you that fundamentally their revenue is increasing each year and they're doing great. Now that is a pretty face you should get behind. So you take care. See you in the next training update. Bye-bye.